Now, let's discuss the benefits of savings account. Growth. Savings accounts let you earn interest on money that you leave in your account. In effect, your bank will make small additions to your money, usually every month. There are factors that determine how much interest rate the bank will pay, such as the economic conditions and how aggressive your bank is in relation to other banks in the area. The interest rate is generally quite low and may even pale in comparison to the inflation rate. The upside is that your funds remain very safe since the banks insure them with the FDIC. Liquidity. Most banks and credit unions provide online access to your funds 24 hours a day, 7 days a week. Many institutions would also let you link your accounts together so that you can just transfer funds online and avoid paying withdrawal fees. The cool thing is that you can move money from one account to another at your convenience, even outside of regular office hours. Automatic savings plan. This is a feature that automatically transfers a previously specified amount from your paycheck into your savings account each time your employee pays you. This is the application of the principle of paying yourself first and helps you develop a habit through forced saving. Safety. One main feature of a savings account is that it keeps your money in a safe place, inside the vault of your bank, credit union, or a reserve bank. If you keep your cash at home, thieves can steal them, fire can burn them down, or insects may damage them. In a savings account, when the bank insures with FDIC, you avoid losing your money in case the bank or credit union fails to keep it safe or the business closes down. Banks insure through FDIC, while credit unions through NCU-SIF. People often call savings accounts at credit unions as share accounts. Doesn't require a huge initial deposit. You can open a savings account for as little as $25. You can find some institutions that may even have a lower requirement where you can open an account with just $1. This is good because it gives you a chance to begin saving your money, and you don't need a big amount to start. Joint accounts. You have the choice to open a savings account with your partner, so you both can save together in a single account. However, savings account has also a couple of disadvantages we should take into account. Low rates of return. You can get a little bit more in a savings account compared to what you can get from a checking account, but it still won't be as high a return you can get in other types of accounts. As of April 2019, the average rate of savings accounts reached only around 1.8% per annum. Let's say you have some idle funds that you won't be needing for some time. You can usually put it in a certificate of deposit and earn a bit higher. Or, if you want it to grow over the long term, you can invest in stocks, bonds, mutual funds, and ETFs because they can provide a higher rate of return. Of course, you have to balance the risks that come with these instruments. Withdrawal limits on a savings account. Although technology has made it easy to transfer money from one account to another, you need to be mindful of the law. The federal government has set a limit on the number and the types of withdrawals you can make per statement cycle. Regulation D allows you a maximum of 6 transfers or withdrawals from each savings or money market account during a calendar month. Fees and minimum balance requirements. Some banks charge a monthly fee or have a minimum balance that you must maintain to avoid the monthly fee. If you can't keep your balance above the level that the bank requires, you may end up paying regularly to have your savings account open. Often, the monthly fee that you will pay will be more than the interest you might earn from your money. No tax savings. The money that you put into a traditional savings account is often money that you've already paid income tax on. Then, when you earn interest, the IRS will demand that you pay the full rate for them. These features make them inferior to other investment choices, such as IRAs, Keogh accounts, and other vehicles that provide tax relief or deferment. Insurance limits. If your money in the bank is less than $5,000, you would probably ignore things like an insurance limit. However, if you have a net worth of $250,000, you should be conscious of where you will save your cash. Naturally, you want an option where they will have a 100% insurance cover. That's it for now. On our website, you can find more posts, as well as calculators and other financial tools. Considering savings account? Which is better for you? We would love to know your thoughts, so feel free to share them with us in the comments below. I hope you enjoyed it, and don't forget to subscribe to our channel on YouTube to get more free financial educative videos.